All right. Hi, I'm Dan Tapiero, founder and CEO of 10T Holdings and One Roundtable Partners. Um, I'm an investor and actually don't know that much about what we're going to talk about today. In fact, I was just asked yesterday to moderate this panel, so go easy on me.
Way to inspire confidence, Dan.
I know. I'm looking to you guys to carry today. Risk mitigation in Web3. So the panelists, I'll just have each of you give a little bit of background, and then we'll go into a nice little back and forth chat.
Hi, I'm David Miller. I'm a partner with Greenberg Traurig, law firm, international law firm, and I'm in the New York office. I practice litigation, but as relevant here, I've been representing exchanges and funds and companies and individuals in blockchain space, in enforcement defense and in litigation. So a lot of my clients, I've represented them before Department of Justice, SEC, CFTC, State Attorneys General, and others. And I've been in the space for about 8-9 years. And I'm a former federal prosecutor, and so took a lot of what I did on the prosecution side and applying on the defense side. And anyway, it's good to be here, and look forward to our discussion.
Hi, everyone. My name is Adrian Wall. I am not a lawyer. I am the Managing Director of Digital Sovereignty Alliance. We are an education and advocacy group focused on Web3 innovation, and excited to be here.
Hi, Stephen Gardner, the Chief Legal Officer for Zero Hash. Zero Hash is regulated crypto infrastructure for other institutions that want to embed a solution into their technology stack. So we're regulated as money transmitter in 49 states. We have 2 entities with BIT licenses in New York. As of today, a trust charter in the state of North Carolina. So we really sit at the edge between consumers, financial institutions, and Web2 and Web3 solutions.
Hello everyone, I'm Chen Arad, also not a lawyer, together with Adrian here. And I'm one of the co-founders of Solidus Labs. Solidus was named by Citigroup category definer for crypto native market surveillance. In practice, what it means is that we work with some of the world's largest crypto platforms, financial institutions, DeFi platforms, and regulators to monitor for, detect, and prevent things like insider trading, wash trading. In crypto, it means that we work, our solutions very much work across off-chain, on-chain, and what we call pre-chain data as part of the block building settlement. Pleasure to be here. Thank you.
Okay, great to have you all. Look, each of you have different perspectives, I can tell that. But I want to talk about where each of you see the greatest risk for blockchain technology specifically, let's say in the coming 3 years. Kick it off.
Look, I think that something this industry has been dealing with for the last few years is that the regulators and the enforcement authorities really didn't understand what it is that we do. And I can tell you, when I was a prosecutor, we looked at this industry this is about a decade ago, as a vehicle, right? For crypto and payments to be used to finance drug trafficking and money laundering, terrorism finance. And that's the wrong way to look at it, obviously. But that's perhaps a little bit more apropos maybe a decade ago, but it's certainly not true now. And I think the problem is that when you talk about enforcement authorities, they're looking to get involved in the next great thing. And so I'll give you an example. We represented, in the OpenSea case, Nate Chastain, a client of mine, on allegations of insider trading in NFTs. Why was that case charged? It was charged because it was the first case involving NFTs. It was a small amount of money, and frankly, it wouldn't have been charged if there was any other case. But enforcement authorities are looking to do that kind of thing, and same thing for another client of mine in the Coinbase insider trading case. And so they're looking, for the next great thing, and that's a problem. And I think that's going to change, and we're certainly seeing it changing on the civil side at the commission level, right, on the SEC and the CFTC, and that's heartening for the industry. But remember, and we were just talking about this before, that it's not like these people are going away. And so, yes, we're all excited about the new administration, the new outlook on blockchain and crypto, and the party's getting started. But as I told these guys, drink responsibly, okay? Because when it comes down to it, enforcement authorities are going to be looking to try to make cases, particularly in the area of fraud and manipulation. And so, just because the registration cases are done, et cetera, doesn't mean the fraud cases are done. And when it comes to the criminal cases on the Department of Justice side, we are going to see cases in the industry under their anti-fraud jurisdiction. And
So where is the risk, though? Where do you see as the main risk?
Yeah. So I think, look, if you look at sort of what is problematic, I think DeFi is going to be a focus of theirs because, at least on the civil side, regulators are thinking, okay, certain businesses must be money services businesses, and therefore they have to have know your customer and AML regs. Well, that doesn't work for a smart contract. And so I think that's a risk, and it requires education for the industry. I also think when it comes to custody, certain custodians hold large amounts of crypto. That could be subject to hacking and fraud. So in terms of risk and where are the enforcement authorities looking, I think it's the same traditional areas of fraud, manipulation, hacking. And then finally, remember that when the feds aren't necessarily doing something, it doesn't mean that the state authorities, particularly the attorneys general, as well as private litigants, aren't going to be bringing cases. And so the industry is going to have risk when it comes to things like privacy regulations, state-by-state privacy regulations. And so if you're asking me to list them, I would probably say the biggest risk from enforcement perspective, fraud, manipulation, privacy areas, hacking, and custody.
I think David touched on a couple really interesting points. If I could just speak real quick first to the hacking and fraud part of it. We were talking backstage. This morning, there was a panel on T3FCU, if everybody was there listening to it. So Tron, Tether, TRM Labs, working in conjunction with law enforcement agencies to seize over $150 million in digital assets to date from criminal organizations, terrorist financing, drug financing, human trafficking. This is an example of blockchain, plus AI, plus basically everyone working together to show what the power of chain can do in response to that sort of risk that you talked about. So I agree, it's definitely a risk, but the sooner that the law enforcement agencies understand what is an option to mitigate that risk, the better for everybody. And they're coming around, with the good work of Tron and Tether. I'll take the risk in another direction, but it's kind of related. My opinion is financial exclusion is the biggest systemic risk of this industry. And that means two things. The first one is, somebody mentioned earlier today that only 1 out of 5 Americans is involved in crypto, right? That means 4 out of 5 isn't. It could be a variety of reasons, but I suspect lack of understanding of how to use it is part of it. How to approach it. There could be a fear. There could be a misunderstanding of risk and fraud. So this education aspect of it for the 4 out of 5 who don't know how to use it is really important. And let me go one step further. And this is me checking the audience to see who's listening. Raise your hand if you've won the lottery. Right? Nobody. Okay. But if I told you that I was going to give you $50 million, raise your hand if that would make a difference in your life. Okay, perfect. So not only are you all listening, but you raised your hands because yes, $50 million would absolutely make a difference. Now, it should surprise you that 70% of lottery winners in the US go broke after 5 years, right? So what does that tell you about the level of financial literacy in the US? It means it's low. The bar is low. So yes, we're going to talk about all sorts of different types of risk involved in digital assets, but I think there's an even more fundamental educational component that needs to be addressed.
Yeah, so I appreciate those points of view, and particularly agree with David's points on state regulatory authorities and fraud manipulation claims by private litigants. But I think we're looking at a new adoption of crypto within organizations that are not used to providing crypto services. They're not used to a crypto experience or a crypto use case. It's 24/7. It's across time zones. It's across countries. You're moving a non-fungible assets into fungible assets. So when you look at kind of the intersection between these new financial institutions getting involved in crypto, you really want to make sure that they understand how the settlement timelines, how the counterparty risk, third, fourth, fifth party risk is impacted when they make those services available. So I think it's great to see more adoption, but I think that you introduce a little bit of risk when you bring in more traditional institutions that haven't built out that specialized knowledge. And we'd like to see, groups work together to bring up the education.
But let me ask you just a little follow-on before. I've always felt that the complexity in the space is just so intense, and it gets more and more complex. If I think back 5 years ago, I mean, it's a completely different world today. So how do we navigate that problem?
Yeah, I mean, I think, selfishly speaking, for Zero Hash, I think you work with institutions and people that know what they are doing, that have done this for the past decade, 8, 10, 5 years, that have repeatedly shown success. And that comes down to hacking risk. Institutions have been custodying wallet keys for several years and without incident. There's transaction risk and exposure to other institutions. So we work with all types of counterparties. It's banking risk. Making sure that you build out redundant partners, because you know that at any time a bank could be overexposed, a regulator can make a difference of opinion or a change, it could be shut down. So I think it's probably, from our point of view, would be just putting to use those practices now and relying heavily on those people and institutions that have done this correctly over the past decade.
So I generally echo and agree with everything that's been said. We are extremely focused on identifying, based on the data, market integrity concerns, market abuse, fraud, manipulation, etc. Some of the things that's been mentioned. And let me throw in some numbers and then take it a bit to a higher level. But, we published a report on insider trading in crypto markets. Specifically, insider trading that happens when an asset is available on a decentralized exchange, as almost all digital assets are before they're listed on a centralized platform. And essentially someone trades on it buys right before there's a listing or an announcement of a listing, and then you can see the sale right after the price goes up. We looked at 18 months of data. We saw that in about 56% of cases in some of the world's largest exchanges that happens. We have a solution, for example, that monitors smart contract code for what we refer to as hard-coded rug pull scams, meaning smart contract tokens that literally you can look at the code with the right models and technology, and you can see that they were designed in order to not give the money back to investors. We found that 1 in 4 new tokens on the top 14 Ethereum chains is like that. Now, that's very disconcerting, but there's also a huge opportunity here, because both of these massive issues, can be detected automatically once it's on the blockchain. It's an opportunity for law enforcement to actually focus more on identifying this based on transparent data rather than using very intrusive means, require data, etc. But it's also an opportunity for us as an industry, and I'd like to piggyback on your point, Adrian. I agree with you. It's so important what we're all trying to do, right? It's about bringing accessible financial services to more people. Now, the law is one thing, to your point, David. The law is going to continue to evolve. Regulators and law enforcement can also enforce retroactively. Ultimately, the law kind of sets what is good enough reason to prosecute against someone. But there's also just principle. What's right? And history shows that markets that are not integrity-driven just don't serve their purpose. If we want to invite more people, we need as an industry, regardless of the law, to combat these things. And I am very proud to say that alongside many partners, I feel like folks on the stage are also partners in that sense. The industry has gone such a long way. And the last thing I'd say, because I said a lot of things that might be disconcerting, is we have to remember that it's not like these issues have been resolved in traditional finance. Not at all. So the baseline is not that high, and we have to remind that to ourselves, but we also have to remind ourselves that we have an opportunity to create, using the transparency of the blockchain and the right tools and people who've been doing this for years, an actually safer financial ecosystem if we do this right and work with regulators over time.
Just add a point and piggyback on that look, I think, again, it comes back to education. and especially when we're dealing with the enforcement authorities. And one of the things that I've done for years in various capacities and representing clients is going in to explain the technology, because one would think that they all know it, but oftentimes they don't. And so to sort of echo a point that Paolo made from Tether, and having represented Bitfinex and Tether and made these points, that this is all transparent and traceable. So, this is some of the worst ways to commit fraud, because everything is out there. Now, yes, sometimes exchanges can be used as cash out points for fiat, and that makes it harder. But if you can actually operate pretty quickly in the space to get the information necessary through multiple layers, as Paolo was explaining. And if you explain that to the regulators and the enforcement authorities, that's going to be helpful for the technology that you're trying to propound and use, so that they don't just automatically and reflexively think that what you're trying to do is unlawful. And to be clear, I think we are bridging a gap, and we are in a better place than we were even 2 years or 1 year ago. But there's still a lot of educating to be done.
And David, I think we would take it one step further. We have the ear of Congress, we have the ear of the White House. We're working on currently stablecoin legislation. Next will be market structure. It's going to be important that these bills do not impede the use cases and the benefits of crypto. Crypto is in a lot of ways more transparent than traditional financial services. We are able to prevent crime because we know more. And where the industry is now, we wouldn't have guessed 10 years ago. Who knows where we'll be in the next 5 or 6 years. We would encourage folks to advocate for laws that don't prohibit that growth. To add one more risk, I see the potential harm coming out of people trying to do good.
I think that's a really important point. And we've kind of always thought about our mission as mitigating the risks, which was very fitting for this panel, but mitigating the new risks coming from the complexity, the newness of all of this, the lack of regulation, without impeding the advantages of the blockchain. And I have to say that, I think our team met with over 30 lawmakers in the past couple of months. After the election, there's a real interest in understanding how we can not only create a safer crypto industry, but actually supersede and exceed the standards in traditional finance over time. Because again, they're there, but they don't actually solve the problem. Not of fraud, not of market manipulation, not of other forms of abuse.
And if I can just add, at the risk of stating the obvious, I think organizations have to have very robust risk mitigation units, departments within. So again, I love talking to the audience. I'm just curious, how many people here are actually risk officers? One?
We love you.
Okay, perfect. There should be a lot more at these conferences. So it's really important that we work together and we kind of meet in the middle. So educators and myself are more than willing to talk to people who are in the risk industry and the risk departments to say, this is what you need to be thinking about. This is the legislation that's coming down. These are the things that we're seeing out there that are commonplace insofar as risk, fraud, hacking. And this is how you can design robust risk mitigation systems within your organization. And to your point, David, it's shocking, although, and there's no shade, there's no shame for it, people who are professionals in the payment industry, in banking, DeFi, or TradFi, a lot of them really just don't know, and maybe they're afraid to ask. So, we can take it on ourselves as people in the industry to extend the olive branch, extend the hand, say, here, we're willing to explain these concepts to you. We hope you're willing to listen.
I don't want to talk too much, but I have a follow-up to your point. If we think about risks, a risk in principle that I think is at its prime right now for the industry is complacency. There's a tendency when things are going well, when regulators, it feels like, are much more aligned with trying to create constructive regulation. When volumes are growing, when people are coming into the industry, there's a tendency to be complacent, and it's a massive risk because, if we face an incident similar to FTX in the near future, all of this, could take a completely different turn. So just to echo your point, Adrian, now's the time to focus not only on growth, but on growing safely. And in our experience, compliance, thoughtful risk programs is a key as part of any growth strategy in the industry.
I'll just echo that point that, look, we have a great new administration's view on this entire industry, and that's wonderful. And we're all excited about it. But as we've all been saying for the last 10, 15 minutes, this doesn't mean that enforcement authorities are going away. It doesn't mean that litigation is going away. It doesn't mean that risk is going away. And if folks think that they can just disband risk or compliance or legal and just plow forward, I would strongly caution against that because, to your point, there could be another FTX around the corner. And then, by the way, what happens 4 years from now if there's a Democratic administration that has a different view of crypto? And then now all of a sudden you whipsaw back to the way things were a year ago. And by the way, the statute of limitations on some of these offenses are 5 years or more. So it's a way of saying, like, it's great, but we still have to be cautious and we still have to be accepting the risks that exist.
So I just quickly want to get into just an interest of mine, which is decentralized systems. Do we actually think, and we don't have that much time left, so maybe we just make this a quick one, can they be free of risk ever? And then can they, certainly be more free of risk than the centralized system we're in today? So just maybe one or two responses on that.
Sure, I can start. I think there's nothing in this life that's free of risk. And I think that even, just saying that something might be free of risk is a risk on its own. There's always risk. And in permissionless systems, considering the complexity, considering their openness, as I mentioned some of the numbers earlier, it's almost to be expected that there's going to be, from a market abuse perspective, it's very appealing for scammers, etc. But I do think they can actually be safer. And that ultimately is about leaning into the transparency, realizing that neutrality doesn't work if it enables evil or if it enables, abuse. And using the right technology, and again, people have been thinking about it for a very long time to move in that direction. So not free of risk, but I feel like they can be more transparent if we play this the right way as an industry.
Yeah, it's what type of risk are you solving for? I mean, computer code can help you find less counterparty risk, settlement time risk, but there's going to remain to be those points and entries from traditional finance into DeFi. There's going to continue to be a fraud, manipulation. So it really depends on which types of risk you're focused on, because risk is holistic.
Yeah, I'll re-echo and just say there's always going to be risk. I liken it to the card counting industry, where just when you think you have it solved, there's going to be someone else who's going to come. There's always going to be a bad actor who's going to come in and try to game and rig the system. We're always trying to solve for risk, and we're always trying to mitigate risk. We're always trying to lower risk. I think it behooves us to actually work with some of those bad actors, eventually convert them from the dark side to the good side, and see if we can't learn from them as well in an effort to mitigate that risk.
Yeah, I agree with everything that was said, and I'll just say that, we have to be very conscious that even with new technology, like some of the smart contracts that are out there, that they're just prone for abuse. And it might not be through bad codes, bad coding, it might not be through hacking. I mean, just ask the people behind Tornado Cash, right? You could have certain state actors or certain groups that are involved that are using that technology in a malicious way, and that could get the attention of the authorities. So I don't think there's any way to completely eliminate risk, and it's something just to be cognizant of.
Yeah, so we only have a few minutes. What are some of the lessons that you guys have learned from the period of your career before you entered into this space? What are some of the lessons from the traditional world that we can apply to this new world?
Sure. So my background is as a lawyer, and before Zero Hash, I was working in regulatory enforcement defense. So I think that having good relationships with your regulators is going to benefit you long term, no matter what. If you're a regulated institution or looking to become regulated, play nicely, play openly, play fairly, and respond. I mean, simple things. Responding within 24 hours to every single email. I think there's a lot of lessons to be learned. We've seen a lot of folks who take an antagonistic approach. They're either remediating that or they are no longer in business. So that would be my piece of advice.
I just want to echo what Steven said. I can't count the number of times that I've seen former clients or clients get into trouble because when we come in, they've already sort of thumbed their nose or they're not responsive to the regulators. When you're transparent, that increases credibility. When you increase credibility, it's like any other interaction with any other person. You're more likely to get what you want. And so ultimately, if there's a time maybe to go to the mattresses, all right, whether that be with the enforcement authorities or private litigants. But if you're looking to cooperate, I always tell clients this, you're either in or you're out. Cooperation is full-throated. You don't play games with the regulators or the enforcement authorities because that will come back to bite you. And being transparent and educating them goes a long way.
All right, guys. I think that's going to be it unless you want to finish it up.
I'll just say
Yes.
the same thing between TradFi and DeFi. No risk, no reward. So we're all in it together. We need to mitigate that risk. And how do you do it? Education.
And I'll say before Solidus, I used to be a journalist, and one principle that I carry with me into our work today is that sunlight is the best disinfectant. Most bad things happen in the dark. If someone is afraid to talk about market abuse, if someone is afraid to talk about the problems, then usually there's a problem to hide. And I'm very proud that we get to do this in our industry.
That should have been the title of the panel. Sunlight is the best disinfectant.
It's tattooed on my arm. It's a little
Okay.
embarrassing how often I use it.
Okay. All right. Thanks so much, guys. Thank you, everybody.
Thank you.
Thank you, everyone.